Maximus Analysis here for July 20th, 2016, and we have another day, high day. Um, but again, it's been really, how can I put it? The day after the overnight moves, it's been really choppy per se. But I would not go short right here, right now, in any way, shape, or form. So let me change this over to a time to show you what the markets look like in the East Coast session. And I think this is it. Yep. So you could see that basically it's been really choppy since the 14th. So you can see that it's just been sideways. Again, high lows in place. And again, sometimes I think people should just take a step back and just look at these charts to say, listen, this is not the place I want to go short. Right here, right now, I would wait for the weekly to really firm itself up before I go short. Because I'll show you why. So again, we have to see again how the week closes out. But this is a pattern on the daily time frame that is more like a continuation pattern. And you can see it in a couple examples, but I'll show you one from last November 2014. So again, we have our price levels, again, this is why we want to prepare, is we have our price levels that we say, okay, if they get back below here, get back below 2116, 2119 and a half, we'll look at, but until they get there, I would prefer to wait for a lower high. And again, on the newsletter, the first thing I opened up with is again overview of past. The past will give you some insight to what is within the present. Now I do have price targets for 2160 at 2139, and they've reached those. So again, right now I'm not trading a breakout. I'd rather wait for a setup than do that. But I wanted to show you this pattern here. Let me put something around it so you guys can really notice it. This small little pattern right here could be setting up for a continuation pattern. And if we go back and look at October, you can see this pattern was very similar right here. So right here you had the similar type of pattern that ended up going up a little bit more. So I would suggest just being a little cautious. If you want to go short, short the lower high. If you're not going to short the lower high, wait for the end of the week. If you're not going to wait till the end of the week, wait till the end of the month. You have to be patient because again, the volume will not reflect exactly because it's not buying versus short squeezing, meaning people in existing shorts are going to get squeezed out of their positions, which then increases some buying type of volume. We'll continue to look on the weekly time. Well, I will continue to look on the weekly time frame. We're at Wednesday. Want to see where this one closes. We don't want to, please don't let this be a false breakout to break down. But again, we have our breakdown levels that we'll talk about. And right now, break down below this 2116 level because again, the volume, like I said before, we can't really use it too much right here because they'll float this up and continue to float it up on lighter volume. So again, wait for the setup. And please don't go long here. You missed it. Wait for your setup. You will get one. And if you say, listen, I'm going to, I'm not going to wait, at least you could break it down and say, all right, well, if this is the pattern, Max, I'm going to put my stop below here, 2130. 30 points, S&P 500, SPY would be a little bit different, but at least you manage your risk and you didn't put a silly stop that you'd be like, listen, if my grandmother sells one share of SPY, you're gonna get your stop hit. Like don't be doofy. Don't put a 5-cent stop. Like listen, I'm gonna get in. And then you say the market's rigged. So we'll watch and see what this action is. This is a hell of a move. We've been seeing hell of a moves because it's just look at this Brexit one and it just grabbed all of it back on this bullish engulfing 200. Boom, all the way up. Expected it? Not really. But again, just looking at these higher time frames to go from there. Going to NQ on the weekly, you see that they're finally above this pennant pattern. So we want to see if this retracement is going to hold 44.50, 44.75 area when we get it. Because again, they're up 4 weeks in a row. We'll see what they have. They've been up 4 weeks in a row. How about that? And see what we can do. So YM. Again, I don't touch on YM that much because, again, it just consists of the Dow, which is just of 30. To give you an example, the Dow Jones was up 36 today, and the components that drove the Dow up out of the 30 were IBM and Microsoft. I don't like that. I'd rather have it weighted on more than just 30 stocks. So that's the reason why, if you're new, I really go over the YM very quickly because it's an index that I really don't follow too much, but I want to make sure I give you at least the reason why versus, oh, he just doesn't like the Dow. That should not be the case, nor a reason that you don't trade something. CL might be setting up here for the long, and I'm just saying it from now. You look at this daily, it can be setting up for a nice long right here. I actually like, if it holds this 43.12, I actually like this long area on this volume. So let's really, a lot of people don't look at volume, but I do. You have a couple things going on. So let's kind of take a lot of this stuff off. This was newsletter stuff. And again, you should be subscribed to it. It's great material. If I say so myself, but it's more to help the new trader and the experienced trader. Again, I have a vast amount of people that look at this videos, and my goal is to help somebody that was in the same situation I was, 12 years ago, getting into the markets and really giving them somebody that's not, because again, you look at TV, you'll get destroyed. It's just the TV pundits are asininely, they'll just say anything for headlines. And if it's a choppy day, they're not going to just say it's a choppy day. They'll say it's a choppy day because gold went down, or it's a choppy day because crude barrels were 7 times less than this square root of oil's formula, whatever. They're just out of control with their bias. But let's just do a quick bar count. Up 81 bars from the low, right? Let's do it again. 84 bars. We got 28 bars. What is our fib retracement level? A little bit under 0.25%. So they got a quarter amount of the bars in for 0.25%. I think that kind of matches up if you look at it, where you have time and price kind of matching up. Interesting, right? So let's see. I think that they will have, if they clear that 46, 47 level, they could really move this one in a fast way. Looking at the USO, again, trading this on the common, again, you have your defined risk that we have below, which would be around this 1040. That's about a 50-cent risk. You wait for a break above this bar and see what happens. So kind of giving you some perspective in regards to things. Again, looking at, because it could be really choppy US, so you can look at the weekly time frame and say where you want it to go from here. Let's look at some names today. So we did have Microsoft that, we have Microsoft that was up, okay, up big. Now, I'm telling you now, if this goes to even close to 54, 50, 54, I will be shorting on Friday. Just letting you know that. High volume at the end of a move, 4 weeks up. Little bit of resistance. My stop will be above here, but I want to see how this candle closes. Again, I'm willing to be very patient with this one, to say the least. You had Facebook move up. Again, I missed this, and I still don't like this pattern. I'd rather have something else, quite honestly. So, again, if you're in, congratulations. If you're not, this pattern is on the weekly is horrible. So I would just rather get a cleaner setup and go from there. It's just about trading with some type of discipline versus trying to get every single stinking move. Amazon, a lot of people are looking for this one to roll over. I am on the weekly time frame. I need a lower high or something. Let it breach here, come retrace up to this point before I look. But again, epic run from February. I mean, this is almost gone up, what? It's gone up 50% since February. So, wow. Price line, again, weekly time frame. Just don't like any parts of this weekly time frame. Daily, they're doing a little, it was fairly decent close. So, again, they have the volume. Is this just a bull flag for more upside? Again, you'll know tomorrow if you have a gap down or if you have a gap up that you could basically fade for the long side potential if you get some overbought, oversold. Oversold conditions going into that. So really watching things right now. And let's look at gold. Gold continues to break down. Had a really nice close today. Watching it, I do have a GLD short that I started last Monday. Not this Monday, but last Monday, yeah. So I'm going to look to see if this 1300 level or that thereabout is going to hold, and then I will adjust, will roll my option. So when I talk about rolling option, I just want to kind of give you the education behind it. I'm just going to use numbers for an example. Let's say I bought the put option at $2. I mean, I paid $200 for it, right? And let's say it went to, hypothetically speaking, it went to $5. So what I would do is I would look for, so it's a $5 option. I would say, okay, I booked 3. Let me look for another delta that's probably like 150 so I can stay in the position. So instead of making a full profit on the one option and leaving it, or the options and leaving it, I'd rather say, okay, I booked 150 and I still think it has more downside to go. Give it like a 50 delta, because remember, things are going to be changing. Deltas do change. And then what I would do is say, okay, I have $150 locked into my position. Profit, no matter if it went to 0. I won't let it go to 0, but I've locked that one in with another type. And then what I'm going to do tomorrow during the day is I'm going to do, probably around lunchtime, do an example of this using the option chain. But we'll see what gold does. Again, on the weekly, still looking weak so far. Again, this is the support level that I would like to ideally see it touch to rip back up for some more upside. So we'll see what happens, and take care.